Good afternoon. Today is Friday. It's July the 14th. The time right now in Singapore is 3 minutes past 1 in the afternoon. Now, let's do a bit of a recap as to what happened on financial markets overnight. We have the US equity markets continue to wanting to go higher. And overnight in the Dow itself, we do not have a new high. And high so far, it is still controlled to this week high at 34,586.94, which is marginally lower than the high that we saw last month at 34,588.68. I have the opinion that the market may have already peaked for now, at least in the near term. So likely we are going to see lower prices in equity markets in the States going forward, and I do see this as a technical pullback for now. So if we do get a pullback, ideally we want to see prices coming back to test the 33,400 to 33,600 range before you decide what you want to do. Okay, of course there is always a possibility we may see higher prices going forward, because the sentiment in the marketplace right now is that the Federal Reserve may have already hit its terminal rate, because the last CPI numbers that we saw this week suggest that it is obviously coming down, and we can see the headline CPI numbers is coming down to 3%. So 3% is very, very good. So does the Federal Reserve still have any more incentive to continue to hike rates? Market participants think do not. Okay, they do not think that the Federal Reserve will still be hiking any more interest rates beyond the two that they have already mentioned for the rest of this year. So the market sentiment is definitely in favor of higher prices if the low interest rate is going to be the incentive for risky assets to go higher. So do watch out for this development on the interest rate front here. But technically, I do believe we are due for a corrective pullback. Over in the S&P 500, we see that the S&P continuing to charge higher at 4,517.38 overnight, and this is definitely a divergence from what we are seeing in the Dow Jones itself. So the target price for this move actually has been hit overnight. My target range is all the while been 4,512 to 4,537.3, and overnight high of 4,517.4 is already, technically speaking, within the bracket of price, which make the market very vulnerable to profit taking. If we do see a profit taking, most likely the market will go back down to this blue horizontal line here at 4,328.8 here. So do watch out for any kind of sign that the market may want to pull back. Okay, over in the Nasdaq itself, we also saw a marginal high for the year itself at 15,602.7 overnight, and this is creeping very near to my ideal price for this market to pick out at 16,266 thereabout. So we still have a bit of a distance between where we are last night and where the market may actually go up to, according to my target here. So still we're going to look out for potential sign of a profit taking. If we do see some kind of profit taking, most likely the market will test first will be 14,900 levels. So do watch out for this blue horizontal line indicated on the chart here. And over in Asia, we can see that the Nikkei has basically found its footing after trading to a low last week at 31,791.7, and this morning we see a rally to 32,780 before pulling back to 32,436 as we are speaking right now. So basically the area in which I think the buyer may actually emerge actually came in marginally lower than expected. The low here at 31,791.7 appears to be the temporary low, because we have a three-wave pullback here. So technically speaking, it may have already bottomed out and getting ready to go much higher, unless of course the Wall Street itself started to unravel, then they may see a new pattern altogether. Okay, in the Hang Seng itself, we see the Hang Seng actually punched through the first barrier, which I have indicated could be the first barrier to higher prices, which is at 19,422.6, which is represented by this blue line here. Sorry, the levels is supposed to be 19,449.11. So we can see the prices actually punched beyond that, and it looks good for the challenge of 20,156 here, which is the next logical level to challenge. And if we can sustain beyond that, then obviously we will look at something else. But in the meantime, this is seen to be a technical rally here, and at most I would see I'll be a little bit more generous here, in the sense that I think this may have a little bit more room to the upside, and possibly gunning for 20,900 to somewhere 21,700. So this will be as generous as I can get. Okay, so the thing is that this is seen to be a technical rebound. in the what we can see in the mainland index itself, we have the Shanghai Composite Index today managing to at least play catch up to the Hang Seng. We have prices coming back to test the most recent high at 3,246 levels, 3,247 levels thereabout. And if this pans out, it would have a very neat three-wave rally to challenge the 3,290 to 3,315 level. So do watch out for an extended run into the 3,200 to 3,300 levels. Over in energy market, we still see energy prices continue to rally much higher than I expected. Prices traded to a high of $77.30 overnight, and we are very near this immediate target here, which I think will be somewhere between $78 and $80.70. So be very careful chasing much higher than what it is currently trading. And ideally, I want to see is a pullback, ideally between $72.40 to $73.90 range, because this would actually allow us to actually for the pressure to go off, for the market to actually base itself before going higher. So going forward, I do see much higher prices in crude oil prices, because we can already know that the $67 to $72 is where these US government is basically replenishing their strategic petroleum reserve. So we have a floor at $72 to $67. So that will be a very solid range of price for the market to hold out, because we know that Uncle Sam is buying to replenish their strategic reserve going into the 2024 presidential election. It need to happen before the next election in 2024. So going forward for the balance of this year, we can be sure that the Uncle Sam will be buying crude oil. Okay, so that will be the one supporting the energy markets going forward. And in the precious metal market, we can see that the market has again rallied to $1,964, thereabout, just under it. And you can see that it is struggling a little bit because there is a lot of overhead resistance near the $1,970 level. So we are getting very close to those range. But I do expect continued strength in the gold market here. Although last night, the gold rally did not go up as much, but we can still see that the trajectory is favoring higher prices going forward. Ideally, what I like to see will be at least a temporary pullback in prices to 1,939 to 1,949 levels. Okay, so this area will be actually quite good to actually accumulate long position. I'm still holding on to my long position, by the way, and at least for the time being, the target is obviously at 1,984. Okay, so look out for another challenge, another maybe $20 more from the overnight high that we are seeing. So this could be where the market will be heading next. Whether it can bridge, we will have to see, but ideally I want to see the market pull back first before it rally. Okay, over in the silver market, we see a lot more robust movement in silver. Silver is more like a Johnny come lately. It at first did not rally as much and it only started to explode on Wednesday and extended higher overnight. This morning it went up to $24.90, very close to my initial target at $24.92. Ideally, I want to see the market pull back a little bit to $24 to $24.35 for the next leg higher, because definitely there will be another move beyond $25. So do look out for a pullback if possible. Over in currency, we can see that the dollar is practically dying right now, and the dollar collapse has been the most severe we have seen so far. From 104.62, the market may actually go down all the way below. He has already gone below my target range of 99.4. Okay, so basically it looks like it may actually has a lot more room downstairs. My new target is $98.2 right now. So again, do not chase this market at this current point, because it's a little bit hairy now if you have not already sold. So do watch out for further weakness in the dollar, perhaps going into the early part of next week. Okay. In euro dollar, we can see continued strength in the principal currency against the dollar. We can see euro dollar is at the highest we have ever seen this year at 112.40. Okay, and this is smack in between the bracket of prices, which I think may actually entice the seller to re-emerge. That level is 112.10 to 113 even. So right now we are smack somewhere in between, and this makes it very vulnerable to profit taking. So do watch out for signs of profit taking in the euro versus the dollar. The same thing is happening in the sterling. Sterling has rallied up to 131.40 this morning, and is again within the bracket of prices. Again, I also feel that the market may actually be susceptible to selling interest here at 130.70 to 131.85 levels. So watch out for these levels. And in Aussie is a lot stronger than expected. So this morning it just went under 0.69. So the 69 cents level may actually be a top for the time being. I do expect market to at least ease off a little bit back to the 68-cent level, ideally between 0.6780 to 0.6825. That area will be good for accumulation of new long position, because I think this one has a lot more potential, and probably we are looking at something at 70 cents to 71 cents ultimately. So do watch out for the eventual rally in the Aussie dollars. Dollar Canadian is very much like dollar index itself, and finally it broke below the last month low at 131.16 and went up to as low as 130.90 this morning, and it is again within the bracket of prices which I think may soon be able to see the bottom very soon in dollar Canadian. That level is between 129.75 to 131, so it's a very wide range, more like 130 pips. So anywhere between this bracket of prices, do not sell anymore if you have not already sold. In fact, if we can get a rebound, that would be even better. If we can get a rebound from where we are right now to 132 to 132.75, that will actually be a much better level to actually engage the market on the short side, because this market has a huge potential to the downside. Ultimately, I think the market may actually come for 125. So do watch out for this kind of massive collapse in the dollar itself. Okay, and this has all got to do with the CPI numbers that we saw this week, because headline numbers is already at 3%. From where we need to get to at 2% is already getting close. And a lot of people were saying that, okay, I think the Federal Reserve has done its job, and it's time to go easy on interest rate hike. And who knows, maybe they will reverse if the economy go into a tailspin. But right now we are not seeing that for now. And dollar yen has gone down quite a fair bit. This morning we have a low at 137.24, and this market right now looks like it's about to rebound. Okay, at the bottom of this 137.24, we see a reversal signal in the sign of a long-legged shadow doji, and this could cause prices to rebound, at least for now. I hope that it does happen, because I want to add on to my short position. The ideal level to position shorts, in my opinion, here is somewhere between 139 to 140.20 levels. So do watch out for an eventual rebound, because this market has not hit its ultimate bottom, in my opinion, because I would believe if this bottom here at 137.24 is the bottom for today, if we get a rebound, another decline below this 137.24 is definitely going to be the logical conclusion, in my opinion. Okay, and over in Bitcoin, although we see massive rally in the other altcoins, we saw Solana, we saw Cardano, we saw especially Ripple. Ripple have surged almost 100% overnight on the ruling by the judge presiding over the SEC over Ripple Lab case, in which the judge has actually ruled that whatever Ripple Labs has offered to the public in terms of tokens, what we're talking about is the Ripple tokens, does not constitute a security offering. So it does not break the US security law. So that news alone is enough to cause the Ripple token to actually rally almost 100% overnight. And in my other recordings, I did give my opinion as to what I think will happen in the Ripple token. But in the Bitcoin itself, we see a rally, but this rally is very disappointing. It did not go much higher than $31,818, and right now it is looking to be coming off again. So again, the different sentiment, and the market right now is coiling, in my opinion, as far as Bitcoin is considered. When you coil, you compress it. So when you release it, the pressure of the release is going to cause Bitcoin to move in a very big way, in my opinion. Okay, so I do expect market to actually have a widening consolidation range. Earlier on, I did allude to the idea that the higher highs is going to be marginal compared to the previous high, and the low is also likely to be lower than the previous low. So right now we have a marginal high relative to 31,458, and if the market do pull back here, I do expect this $29,508 to be taken out on marginally before it bounces. So do watch out for the widening range of prices as the market consolidate and compress. Okay, to look out for the eventual explosion in the Bitcoin prices. In the meantime, this is all I have for you, and I wish you guys have a great weekend ahead, and I'll see you again next week. Bye-bye.